locked in to the Cash Flow Show with Dave and Nate, the best place to navigate how to achieve capital appreciation with commercial acquisitions. Here's your hosts, Dave Seymour and Nathan Amaral.
It's Winston Churchill.
I can't see it. It went down. It was.
I did?
It was. Yeah,
Oh,
I
I mean, look,
totally can't see it. Who was it? Who was
I
it?
love this. I love this.
By
guy.
the way, I think.
Can you see that?
No, go back now. Okay, wait. The other way. Yeah, that way. No, the other way. Yeah. Okay. Yeah, I see him with the guy with the cigar. Yeah.
Yes. You mean the guy with the cigar? That's Winston Churchill, dude.
Is it really?
Yeah, that's not just any guy with a cigar. You know, one of Winston Churchill's famous quotes was to
What?
tread lightly, and I'm paraphrasing.
Yeah.
Tread lightly, but always carry a big stick.
Wait, I thought you told me that was your quote. I'm kidding.
No, my quote was, never before in the field of human conflict has so much been owed by so many to so few. That was
Dave Seymour. No, that's
That's
good stuff. I think you got me sick, by the way. I think you virtually got me sick.
How the hell could I?
Because the other day or the other week, you were the one that was like coughing, or you weren't feeling that well. Now I'm not feeling that great, so I think it just came through.
They don't have any COVID in the Azores. They're not allowed to get it over there, are they?
They're not allowed. But how's it going over there, though? By the way, I hear
Dude, I don't know. My president's still alive. So that was...
No, I swear, it sounds like I was watching some of the news, and it sounds like it sounds like an episode of like 24 or Homeland or something like that, man. It's just like one thing after another.
Right. Yeah. So it's funny. Massachusetts was like, you know, one of the most disciplined and stringent states there were, right?
Yeah.
So I can't even figure out the phases anymore. But I think we're in phase 2, step 7.45 and 3, something like that.
Okay.
But we're now allowed to have 10 people at a table in a restaurant instead of 6.
What? Oh
yeah, we've gone up to 10 in a restaurant if you choose to. But as we begin to relax our stringent rules and regulations, if you read the fine print, it says we're having an uptick in cases, but we're having a downtick in deaths. So it's every freaking day, dude. It's like something new. Did you see the Prez? Did you see my man standing on the balcony?
I saw him. I was like,
saluting the American people. I'm like, Don, my brother from another, my orange-faced lover. What are you doing, dude?
I swear, I was just like, this could either go really well or bad. And I'm just watching him get out of the helicopter. I'm like, I'm just waiting to see. And I could tell he was walking a little bit slower than normal, and but I mean.
A little huffy and puffy.
Yeah, maybe, you know. And but man, the salute and everything, it was just like
crazy, right? I'm sitting there, I'm like, who are you saluting, man? There's nobody there. It's like the whole world is I'm gonna swear right now. The whole world's a freaking reality TV show. It's like, come on now. And then the biggest star of this week, the biggest star in politics this week.
I'm going to say Mike Pence.
No, close. The fly.
On Mike Pence. Yeah, okay. I was going to say Mike Pence because of the fly, because it was just, everybody was talking about it.
No, politician who sat with a fly. I don't know why he sat with a fly. Perhaps he'll die. It's like, what the? And it's got its own Twitter account. It's got like
No, it doesn't.
Followers.
No, it doesn't.
Google it, Twitter it. Mike Pence's fly as a Twitter account. Straight up. We're all going to hell in a handbasket.
Oh,
I mean, there's so much serious shit going on in the world, and we're talking about a fly that landed. And you know what? If his hair wasn't so whitey,
it was perfect.
You might not have known, right?
That's true.
You might not have known that there was a fly up there.
Yeah, that's true.
It could have blended in.
Yeah.
But a black fly, it would be like if one sat on your nice white shiny Nike hat.
It would just be there.
We'd all know.
Yeah.
We'd know.
Everybody
would know.
Do
the thing?
Oh, man. Do I want to do it? Yeah, I can do the thing. Welcome, everyone, to the Cash Flow Show. So good to have you here. Let us know you're here in the comments. And this is David Seymour, and I'm Nathan Amaral. Say hello in the comments. If you're new here, post new. What's that? What is this? A lighter?
Hey, what's up?
What's up?
What's up?
Yeah.
I don't know. I've been playing thumb war with the kids.
Text
1,
us.
2, 3, 4, up in the air, thumb war. I don't know what.
Let us know you're new in the comments below, or if you've been around for a while and just want to say hello. That would be great too. Let us know what you're doing, what's happening. Dave, we got a lot of good stuff that's happening on our end. What do we kick it off with? Because I feel like we got a lot to cover in a short amount of time. So what do we got?
Yeah, yeah. Look, man, it's been a busy week. I don't know, man. They seem to be flying by right now. I'm getting a lot of information.
Uh-huh.
I'm watching a lot of information. I thought it was kind of interesting. I had a conversation with a commercial broker this week, where they're beginning to see a reduction in price per square footage for apartment complexes.
Oh.
Are you ready?
Where?
Manhattan.
Oh, Manhattan. Come on.
It's happening. It's happening. Like the
Yeah,
Manhattan.
but I thought that would be like an obvious thing, right? It's just like, that's the first place it's going to tick.
Yeah, look, here's why I say it, because, think of Manhattan, think of LA. It's the most expensive real estate in, maybe in the world, right? I'm throwing some stuff against the wall and seeing what sticks.
Yeah, Tokyo.
But it was just interesting to me to think about, the ego of a market that believes it will never change, right? Right, the ego of the entrepreneur who says, "I've been killing it for 20 years, so why won't I kill it for the next 20? I don't need to change," right?
That's very true.
Or already the real estate developer who's built multiple, complexes with retail, retail attached, and these kinds of other beautiful projects out there, going, we're just gonna keep going. We're not. We're not going to
keep building.
And that's not specifically directed at anybody. I love everyone, right? But at the end of the day, if you cannot identify the movement of capital in a market, number one, and if you can't identify the ability to pivot in and out of some scenarios, it's kind of interesting. It really is.
Yeah, one of the things. Go ahead. Sorry.
No, go.
Speaking of New York, though, one of the things that caught my attention was I heard that J.P. Morgan Chase Bank particularly, had closed already 14 branches. That number could be a lot higher, and this is 14 branches that they've permanently closed. So those are cornerstone leases, long-term anchor clients, that have now moved out of New York City, closed down out of New York City, Manhattan. And that's another ticker sign right there that shows you that things might start domino effect in the big metro cities.
Yeah, for sure they will. The foot traffic isn't there, the occupancy isn't there, right? If you want to go to the Big Apple, you can go, but it's definitely a different Big Apple than the one that we were in the last time we were there.
That's
what
true.
I'm saying? So it's I've said this so many times today. I'm going to say it again. I don't like being right.
Yeah.
Right. This is one of those situations where it would be preferable for all of us, kind of, if it was wrong, but it's not. The COVID crisis continues. It's not flattening. It's not going away. I don't think any intelligent person believed that it would when you're thinking about the size of the pandemic and the impact it's having.
Yeah.
But human beings are the most resilient organisms to ever be in existence.
That's a true
right?
statement.
We
are.
are.
Absolutely.
Right?
Resilient.
If you think about us, what do they say? If you think about us, we should have all died years ago. We should have wiped out back in the day with the dinosaurs. But thank the Lord, some of us got a brain bigger than a pea, and we've been able to use it. Right? We've been able to use it and pivot and adjust. And that's the winners and the losers are going to pivot and adjust, and those that don't.
It's a great
keep on.
And it's a great year to do it too. It's a great year to do it. There's a lot of people pivoting just in work related, just jobs and changing jobs and starting businesses, whatever. But it's a great year to pivot even in your investments. If you've been doing something for a period of time, like investing in your 401k for many, many years, now's a good time to look at alternatives. Now's a good time to change what you've been doing and do something drastically different, or just something maybe you're not familiar with, but you say, okay, this looks more secure than a volatile market. So
you know what it is, Nate. People in general, and this is with respect, right? Complacency,
right,
is it's a part of the fabric, man. I mean, I'm okay. I'm all right. You know, we've had these conversations before. I got, 2.5 million in my retirement account. I'm 55 years old. I'm golden. Well, no, you're not, stupid. You're going to run out of money by the time you're 65, right? So, that complacency, the arrogance and the ego attached to them, they end up becoming almost like a shield of honor that some people carry around, right?
Yeah.
My 401k's paid me 7.5%. Oh, brilliant, genius. Yeah. What did you lose in compounding costs, right? So these conversations are all great conversations to have, but there is going to be a separation, guaranteed. There's going to be a separation between wealth and poverty. It's going to grow. Unfortunately, the system is just designed that way. Whether the Democrats win or the Democrats don't win, there's not enough power to change that divide, which is sad. I mean, I'm not I'm an entrepreneur, but it doesn't mean I'm an asshole. You know what I mean?
Yeah. And I look at it. Another way I look at it, though, too, Dave, is I look at what's happening now with what you're doing with the mastermind class that you have. Is also, I look at that like a light bearer, like you're bringing light, you're bringing education, you're educating people along the way to securities that they may not even be familiar with. They may never thought it was even possible, right? They see it visually, like they can see the buildings and they know it's there, but they don't know how to get in.
It's funny. I look at a lot of, I'll call them competitors, but they're really not. But I look at other fund managers in the commercial multifamily real estate space. And, you begin to look at the broker dealers, the financial advisors, the FINRA brokers, all these different, because now I'm really in the financial business.
Yeah.
It's like, my product is sticks and bricks, but I'm in the financial business.
Right.
But you start looking at the history of these guys, and I think about, series
Seven?
Series 7,
yeah.
right? There's a number.
Right.
I wouldn't even know the difference if you smack me over the head with it. But the amount of education and the fiduciary responsibilities that these people have, and I look at that intelligence level, and I think to myself, how does that really manifest in good service? How does it manifest in almost like the Reaganomics, right? The trickle-down effect of Reaganomics back in the day.
Yeah.
How do you benefit more than just yourself in these scenarios?
Sure.
And, I've found for myself that education is only power if implemented, right? Knowledge is power if implemented. Otherwise, knowledge is just there for knowledge's sake. And, being able to, I say educate, it's just lay a blueprint out. And if somebody wants to follow that blueprint and execute on it, the results are there. And if they don't, that's fine too. Just swim around in the education ego that some people love to, slosh around in. And I say it respectfully and disrespectfully all at the same time, because, I compete with that in the financial industry all the time, right?
Yeah, and just to add to what you're saying, though, what's really important is, since we're talking about the finance industry, and now there's like a whole new plethora of brokers, because when you start slicing the pie of financial services, right? And now there's more opportunities, there's more products available. What's really important in that entire mix is the person that you're dealing with, the person that you're entrusting with your money to do that. Do they have a track record? Have they, do other people trust them? Can you show proof? Is the properties there? That's why I love when we do this deal of the week, because people can see the actual physical tangible asset, that's there. So that's really important.
Do you want to pull that up? Should we hit the deal of the week?
Yeah, since I brought it up and revealed it, I'll definitely talk about it. Let's dive into that.
Let's pull it up on my side as well.
Yeah, let's do it. We got
This one's exciting, dude. This is a really nice project.
All right, let's go there. All right, it's here. Got it.
All right. So this project is it's insightful as well as a great freaking deal. It gives us a real flavor, if you will, of what's coming, heavily now towards us in the Floridian marketplace. So this is nice. This is a mid-rise. This is a 5-story building. It's in the Cape Coral, Fort Myers area.
Okay.
Lee County consistently ranks, as it says on the slide there, amongst the top U.S. Counties for population growth and job growth. And, it's interesting. People are still saying, you're talking about job creation as part of your buy box criteria. And yet, unemployment is still nowhere near where it needs to be. I mean, the claims have increased again this week.
Yeah.
I want to say increased. I mean, they haven't. There hasn't been less amount of claims that the government expected. There's actually been more.
Right.
And that continues to be a huge challenge. They're still messing around with the benefits plan.
The stimulus package. Yeah.
With the stimulus package. So that's all up in the air. But anyway, one of the things we've talked about before, and I'll reiterate here when I say job growth, is retirees are still retiring. They're still moving from all over the country, but primarily, we got a huge population up here in the Northeast that goes to the Southeast. And with that, statistically, every one retiree creates 4 jobs in the market. So, we don't take that kind of data lightly. We research it. We position it on these assets. So, as I said, it's a 5-story mid-rise structure, parking on the ground level. First floor is 10 Class A small office suites. So I'm going to say that again. The first floor has 10 Class A small office suites.
So you're talking commercial then?
Yeah. Well, this is a mix.
Okay.
This is office and residential.
All right.
Okay. It's a mixed unit.
All right.
The remaining 3 floors are residential, as it says. So it's a 5-story building, parking, offices, 3 floors of residential. The exterior structure was 2008. We know what happened. The project sat dormant. It was picked up again and restarted in 2014. And in 2014, they did a pretty substantial, interior finish. Was all taken care of. So it's in a beautiful position. Nice 10-foot ceilings, great occupancy, travertine, et cetera, like nice high-end finishes. Now the first floor where the office space is, here's the play. We've allocated a budget to take those 10 units because what the prior owner has done, which was incredibly smart, was he left the kitchens and the 2 bathrooms intact in these office suites.
Okay.
So now for us, here's the value add play, which is ridiculous on this asset, is taking all 10 of those and converting them back to residential, which we can do.
Okay.
So now I increase 10 residential units.
Right.
So instead of being the 30, we've now got the 40 unit mid-rise that we're talking about.
Nice.
So we're going to acquire this one for 5.96, just under $6 million.
Okay.
And then 72,000 invested into converting the 10 office units back to the residential. So here's the beautiful thing with it as well. There's no tenant movement. I don't have to move a tenant out to do the work.
Right. That's true.
Right.
That's
it's
true.
already wide open. It's ready to go.
Right.
Bids are in. So converting the 11,850 back from office to residential, the square rental rate will increase at 45 cents per square foot of rentable asset. An annual increase in the NOI of 63, just shy of 64,000. Construction phase, we got budgeted a 90-day, like we can churn and burn.
That's pretty quick though. I'm impressed with the 90 days. That's pretty fast.
Well, look, when you've got the track record in that market that we have, the ability. I don't care whether it's 10 units or whether it's a single family house. When the phone rings, does a contractor answer it?
Right. So true.
That's it. And those, 20 plus years of experience, those relationships are ingrained, so it's not a concern.
So true.
So 90-day, that includes inspections and permitting. And then because of the high demand for the residential units in this area, we're very bullish on it being leased up very quickly. So when we take that strategy on this particular project, we look and run out the numbers. Cash on cash year one, just shy of 13%. Okay. So that's a targeted return for the investors. And then over the 5-6 year hold that we project with all of our projects, you're looking at 17.68 cash on cash, quarterly distributions. And then the value of the investor capital working in this project over that period of time puts us in at about 20.5 internal rate of return for the life of the project. And when you look at the equity multiple on this one, it's a beauty. I mean, it hits all of our buy boxes.
Yeah.
It's 2.7 times your capital coming out you put in. So we love this project. Again, we love it for a lot of reasons. It's already set for that conversion.
Okay.
Just another beauty. I mean, these things are coming fast and furious to us right now. So
I got a question for you though that I think I'm sure other people would have is, let's say year 3 comes around, because you mentioned investors stick with you for the long run, right? 5 years. Okay. What happens if someone has an emergency or they need to pull their money out and they got something going on in year 3?
Yeah, great question. We have the discretion as the fund managers to, on a case-by-case basis, entertain, taking the capital out and reimbursing the investors. So we do have that. But at the same time, man, the investor capital is the workhorse that everybody gets the benefit from, right?
Right.
So, and I have these discussions with our investors, and I tell them, look, when you come in, just understand we're coming in together.
Right.
This is a partnership, right? You own a piece of this company. So, we do entertain it. It is within our PPM to do that. But we don't anticipate that happening.
Yeah.
Some investors are coming in, and the conversations are, 250,000, $500,000. One investor's having some discussions right now. We're at 20 million. I'm following up on that presentation later on next week. So the ability for that retail investor to come in at that 250 mark, which is the average, it doesn't kill the fund to reimburse the 250 plus returns.
Yeah.
But that 250 is working, and that's what's important.
Right. Yeah, and I think it's important, I'm sure, of course, in your conversations, this is not something that, it's, someone's last dime, right? It's someone where, they're repositioning assets. And that's important for, to know. But yeah, that's, the good thing is that the people that typically get into these kinds of projects are looking for alternatives to what they already have long-term. It's a long-term play.
Sure.
Yeah.
Look, the alternative investment market is growing exponentially because of COVID.
Well, that's very true.
If you research it, you can get 20 different offerings in your inbox in a matter of minutes.
Yeah.
One thing I will say, and this is important, credibility is everything.
Oh, very.
If you are able to get a private placement memorandum, the official offering of a company, without showing your ability to be an accredited investor, just know that offering is already breaking the rules. I cannot share. If I sent you an email right now with our PPM on there, and we started going through our PPM live on Facebook, forget about it. I'm going to jail. Like, well, I don't know. No. You're breaking the rules.
Right.
These are highly vetted offerings that we have. We've ticked all the boxes with the SEC. We don't take any of that lightly. And, just for those folks that are looking for alternatives right now, if you're part of that, millions of people are looking to move capital because of the COVID crisis, then, just put that on your radar.
And very briefly, can you just explain what a PPM is in a summary? Because it is a chunky document, but in summary.
Are you talking about my figure?
Hey, by the way, just so you know, Paul Kirch left a comment and he's like, Dave Seymour, Florida looks like it's treating you right. You're looking fit, my friend.
That's quality. Yeah. It's treating me so well from a distance. I'm still up here in New England. In fact, our offices in Florida are the ones with the tan. But they're getting a little soggy right now, so I'm grateful we're up here. My chunky document. Is that what you want me to talk about?
Yeah, let's talk about the chunky document.
You know what's funny, Nathan? We've known each other a very long time, and I love the way you open up. Can you just briefly describe? What do you mean, dude? Briefly and succinct. Not part of my freaking vocabulary.
That's true, but I'm just trying to,
I will.
We can talk about this stuff for hours.
PPM is a private placement memorandum.
Yeah.
and it needs to be approved, and all of the legalities within it need to be documented by the offering company, which is for us Freedom Venture Fund or Freedom Venture Investments. It needs to be approved. We need to be approved as the managers of the fund. The fund's methodology needs to be approved. Its strategies need to be approved. Its finances, its track record, its operating agreement, how it works with investors. We have what are called A shares and B shares. All of our investors have A shares. We have B shares. Those shares are treated differently. The investors always are given preference in all financial scenarios. It talks about how we pay investors, how they get their K1 distributions. So a PPM is the Mac Daddy of a business plan,
Right, and
for $100 million fund.
When you say approve, it needs to be approved. You keep bringing that up. Who is approving that?
Securities and Exchange Commission.
Thank you. I want to bring that point up. I knew the answer, but I want to bring that point up. Because a lot right now, more than ever before, I don't know what it is, maybe because the way the world's going, more people have more time and stuff like that. But right now, more than ever, people have to understand that anything that you're investing in has to be regulated. It should be regulated to some degree. Okay.
Dude, I am so regulated. Like, sometimes I'll be having conversations with my partners, and Walter, you know, I told you 20 plus years in the industry in the Floridian market. He looks at me and he goes, "No." I go, "What?" He goes, "You can't say that or this or that or whatever the case may be." You know, that's not in line with, you know, the rules. And it's not done with bad intent.
No,
It's just conversation.
Yeah.
I'd say real quick, we had a marketing piece that went out there, and our marketing team, it didn't go through a more stringent approval process. It had the word guaranteed returns on there. They put the word guarantee in there. And at midnight, I'm like blowing people up. Seriously, at midnight, I'm like, "You guys need to understand something." And they're like, "Oh my God, that was that bad. We knew that. My mistake, blah, 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 blah." You can't make those mistakes. You cannot. 70% of the clowns who think they're going to be either syndicators or fund managers. There's a guy out there right now. He's doing some online marketing thing where he's teaching people how to raise funds, how to be a fund. And it's like, you cut one corner, you take one lack of responsibility in it, you will go to jail. Not you know, not like a little slap on the wrist. You're going to jail. And here's why. Fiduciary responsibility.
Very true.
And that means the investor's capital is always in the best possible position. So a PPM lays all of those rules and regulations out. We're probably over somewhere between $250,000 to $300,000 invested into the company, just in building the company, putting it together, putting the legal together, the PPM, the documentation, the process, the marketing. You know, you don't step into this business lightly. You know, the easy part is actually, you know, putting all of that structure in place on the front end. The hard part is having 20, 25 years experience, you know, in the execution of them. So think of the PPM as it's a legal document. Think of it as a Mac Daddy business plan that has been signed off by legal entities that have approved it, and you have to get what's called an Edgar filing. And the Edgar filing is the actual filing that the SEC does. It says, we've looked at this. It's okay to take it to market. So,
That's great. Thanks for sharing that. That's really important. We were going to transition into a little bit about the JP Morgan and the bonds. Should we do that?
Yeah. There's two things that are highlighting you know, our business plan to be the right one. I'm just going to go 0 degrees on it.
Okay.
So investors always need speed of execution. We call it velocity of capital, right? Is your money working at a very low rate over a long period of time, and does that work for you? Or is your money working at a high rate of return for a short period of time? Or is there a blend between the two, right? How fast and how effectively can you get your money, your retirement money, your whatever, your cash on hand? How can you get it working?
Right.
So there are indicators in the market, if you know what you're looking for, that will tell you where the velocity of capital is. So one of the biggest challenges, and you brought it up, for raising capital is actually regulation. And I know that's contradictory to what we just said, be regulated.
Yeah.
But I cannot say, Nathan, you say to me, you know what, Dave, my uncle just inherited $15 million.
Right.
He knows he's got to pay taxes on it. That's fine. But he wants a tax advantage strategy
Right.
for $5 million. And he wants a decent, solid, consistent return. I know your fund does that. Dave, let me introduce you to my Uncle Charlie.
Right.
And I say to you, you know what, Nate? If your Uncle Charlie puts $5 million in, I would love to be able to compensate you for that relationship.
Yeah.
And I'll give you 5 bips or 5 points or whatever. I'll give you 5 points on the money raised. If we did that, I'm going to jail. Okay? Because my friend Nathan is not a licensed FINRA broker,
Right.
financial advisor, etc.
Yeah.
However, if you can pull up that link that I sent you to
Okay. Yeah, let's do that. Yeah.
if you can pull that up.
Got it.
I think it would be informational. Now,
Yeah, this is
it's
important.
kind of a heavy read. There's a lot of detail in there.
Yeah.
But here's what's happening.
Let's get this summary.
Congress is tucking this into the next stimulus package, is what we've been led to believe. Now, our attorneys are like on point waiting for this to happen. And basically what this one is saying is this, is that you can have 2 levels or 2 tiers of what they call finders for capital for alternative investments. You can have a tier 1 and a tier 2. A tier 1 is the example I just shared with you.
Yep.
Where Nathan introduced me to an uncle, and that's all he does. Now I can, and they haven't finished all the rules and regulations yet, but it looks like I'd be able to make some kind of compensation to Nathan for that referral.
Right.
Okay. Now the next level up from that is a tier 2, where we can actually build a team to take on outbound calls to accredited investors, to build some kind of relationship with them, but not representing themselves as a fund manager, but an extension of the fund's offer.
Right.
And in that situation, we are able to build, just like a mortgage broker, at a brokerage.
Yes.
This would be a brokerage for capital raising without all of the additional structure, if you will, or regulation attached to it.
I got a perfect, absolutely got a perfect, I got a perfect example for that. When I first got it, speaking of the mortgage business, and this is the example I was going to give, is when I came into the mortgage business, I was a mortgage originator, okay? I wasn't the broker. So coming in as an originator, I was the one just hammering on the calls, putting everything together, but my name wasn't on the final documents in the beginning. It wasn't until that I went through the hoops and the hurdles to get that right. So that's really important. That's kind of what's happening here. What I like, I know we talked about regulation and deregulation. This new proposal that's here is more of a deregulation.
It is.
That gives now the opportunity for prospecting within a fund. And on a different level, on a much more open level, which is really good.
This is important, Nathan.
Yeah.
You might deregulate the flow of capital to a fund, but there is no deregulation in the actual fund itself.
Very important. Very important. Very true. Yes.
You know, if you receive that phone call as an accredited investor, just understand where the money eventually ends up.
That's right.
Okay, because the fund compensates the brokers, the fund will compensate, and that's all in the PPM as well.
Right.
It shows exactly how we compensate any lead generation for capital through FINRA brokers, institutions, hedge funds, retirements, all the other funnels we work. But the reason that I thought I'd bring that up, and if it's still up on the screen, I don't know if you need to keep it up there, but you could probably take it down. I just wanted to show how interesting it was.
Yeah.
So that's the front part of it, if you will, is, the Congress, and if we don't stimulate the economy, we're going into a recession. We may very well already be there according to GDP and some people, but you have to make it easy for money to move.
That's the most important thing.
That's it.
That's the most important thing. I'll tell you what, I love these talks, and years ago when President Obama signed the Jobs Act in 2016, that was a
Right.
big breakthrough. That really, the deregulation of raising capital on different sectors was really important.
Yeah.
This
Yeah.
gives another opportunity
Yeah.
where people now, again, within the fund, are able to use the word lightly, marketing to new prospects, which is really beneficial.
Because there are millions and millions of people out there that are absolutely terrified right now.
Exactly.
And, how do I get to knock on every one of those doors, shake a hand and say, hi, I'm Dave. You recognize me from the TV show?
Yeah.
I want to show you what we got going on right now.
Right.
It's very hard to do that to millions and millions of people for obvious reasons. So this allows listen, we're already building that team. We're already building that team in anticipation of it going. And when I say building that team, here's what's critical. They have to have an absolutely documented process of how they interact with people. Because, sins of omission still can get you to jail.
Yeah, it's very true. Yeah. Track record.
No, is not a defense, right?
Yeah.
So the ability for them to process a potential client professionally, we're already building out that back office, and of course, it's it's Eric, our operations part of our company. But it's exciting to watch that because there's a lot of really good people who have been put on the sidelines because of COVID, right? People who can't go out in their sales capacity anymore. People who can't go out in some of their educational capacities. Who are good, decent, hardworking people who now have the ability to create a pretty substantial income for themselves through service, raising capital for people who want to put money to work.
That's true.
Right?
That's true.
And then put it into a fund, which is based on the fundamentals of freaking cash flow.
Yeah, exactly.
I mean, God is good. All these things line up for all of their faults, in Washington. Every now and again, they come out with a pretty decent idea.
Yeah.
And, when your radar is up looking for the pertinent information, you'll be able to find it. So they're trying to make money move.
Right.
Now, here's the other side of the equation. Pull up that slide on the bond market.
Yeah, I got it.
Let me know when you got that slide up.
Yeah, got it.
So why do we need to get money moving, right? That's the question you ask. Why would they put in systems to get money fluid, to get it, velocity of capital? Well, here's why. J.P. Morgan says real yields, i.e. your real returns, are negative for $31 trillion worth of a bond market.
Ooh.
$31 trillion of your capital, Mr. and Mrs. Investor, according to J.P. Morgan, will be a negative real yield.
It's huge.
That's painful.
That's coming from one of the biggest asset managers in the world. These numbers are like spot on. And they've brought this up multiple times. This is I don't want to call it a crisis in itself outside of a pandemic, but the capital market has to get moving. Now, I'm not here to bring up what side is right or wrong, but there's also, this actually plays into the deal that was signed earlier this year between America and China, the new act that Trump signed. I don't know the exact name of it. But it was to get also capital moving to other markets in other developing countries. And this is, it's really crucial. This stuff has to happen in some way or another. Money's got to move.
Money has to move. It has to move. And what's so sad is the majority of the uneducated, it's not intelligence, it's just seeking education.
Well, correct, yeah.
The majority of the uneducated still believe that the bond market is their safety bet.
That's true.
They figure it's okay. It's the bond market. It's guaranteed by the government.
Yeah.
Tax-free distributions, blah, de, blah, de, blah, de, blah.
I'm safe and secure.
So we do a weekly webinar at Freedom Venture Investments. It runs on Thursdays at 2:00. And we went through this topic pretty extensively, and it was a lot of Q&A bouncing around on the webinar. But there was one person who said, how is it possible? Can you please explain to me how you can even get a negative yield in the bond market? So this is the other side of the equation. If there's $31 trillion that's looking at a negative yield, when the investors on the back end of that $31 trillion smarten up and realize it's a negative yield, they're going to want to move money and they're going to want to move it fast. Which is why on our side of the equation, the finders, the ability to get people in there without all of the additional regulation around, capturing capital.
Yeah.
There's going to be an army of them waiting for $31 trillion to come into the marketplace intelligently, right? So why is a negative yield, real yield, even possible? Well, it's the Federal Reserve setting the interest rate.
That's right. Exactly.
Because the Fed is I think the actual Fed number is like 0.06.
It's right, correct. Yeah, it's close to zero. Yeah.
It's close to zero. And then they turn around and they said, okay, we're not going to touch this probably for 2 years.
Correct. Yeah.
For 2 years.
Yeah.
So you can take that down, Nate, if it's still up.
Sure,
brother.
sure.
So look, the story is this. The story is this. We got macro and we got micro markets, right? The micro markets are the markets that we invest in Florida, in the Panhandle, the corridor, I-41 up the coast, 75 up to Orlando, right? That's our micro market. The macro market is screaming, saying money needs to move, get it going, and get it going now before we all go down the crapper, right? That's what it's really saying.
Yeah.
How can we help it? Well, we can help it by putting less restrictions in there of allowing money to move around. Now, Homeland Security and all of those extra protections are in place. In those macro markets, we still got to make sure that, there's no bad guys involved in any of these processes. But the ability to help an investor move that $250,000 to a 6% preferred rate of return, targeted 10 to 14, IRR 20% plus over 5 to 6 years is a service.
Yeah, it looks more attractive for sure.
It's a service.
Yeah.
If you're sitting in a $31 trillion, negative yield investment, and looking for a place to get in the game and take care of you and your family going forward.
So true.
So anyway, man, I thought that stuff was pretty interesting to bring it to the forefront today.
It is.
In the middle of all of the still the sadness and the illness and flies on Pence's head and saluting to nobody on the balcony and Kamala Harris,
Oh man, that debate I was like, wow. Talk about calling people out right from the start, just like poking in people's chests.
I like the Kamala Harris hand. I'm talking.
Yeah.
Right? All of that stuff. And then I just don't. There's no sincerity in it.
No.
I want to tell the American people.
Yeah. What's funny is before debates and after debates, it's a totally different attitude. It's like, hey, good job. Yeah, that was good. Yeah, real good.
Yeah. Pence was on the stomping grounds afterwards.
Yeah.
It's a fact. Here's my hand. We won. Yeah, okay, buddy. So anyway, that's where it's at, brother.
Well,
that's where it's at.
The better news is everything we presented today, especially the deal of the week and the fact that there's more opportunities out there than ever before. Fact check people who are watching and tuning into this. Make sure that you are making sure that who you invest with is someone who's trustworthy, secure, and backed up, and they got that chunky exactly.
There you go. Look, go right there, www.freedomventure.com.
Exactly. You get over to freedomventure.com, and that's where the conversation can begin. Good stuff.
So I got one more piece or two more pieces of good news.
Okay, great.
COVID's loosened up enough, like I said, that we can now have more people in a restaurant. So on November the 7th, for my people here on the North Shore, in the Massachusetts area, please join us for a free steak luncheon at Polana's Steakhouse, November 7th. Jump on to freedomventure.com. Just put in info if there's an opportunity in there to make a little notation, steak luncheon. You'll get a link to attend that event. And if you're in the Florida market, then join us the week after on November the 14th.
Wow. Two steak dinners.
There. 2 steak dinners. Well, these are filling up fast, so we're probably going to be doing it bi-weekly, I think.
Okay.
But down in Tampa, we'll be down there, and Kevin Harrington will be with us. It's in his marketplace, so Kevin will be there as well.
What day is that?
What's that?
What day is that?
That's the 14th. So November the 7th is the Boston event in Peabody, Mass. And November the 14th is the Tampa, Florida event.
Okay.
Bascom's, I think, is the name of the steakhouse in Tampa that we'll be at. Same kind of thing. It's a luncheon presentation for accredited investors to come in, get a little eats. Everything's COVID compliant. It's funny how different the rules are in Florida compared to
all the food is COVID free, just so you know.
all the food is it's actually COVID free, fat free, cholesterol free.
Wow.
The more you eat, the more you lose. It's
That's
magic food.
amazing.
Yeah,
But wait,
yeah,
there's more.
there's more. So yeah, you can grab some of that info as well, and you're more than welcome to come join us.
Yeah, guys, get over to the website at freedomventure.com, or you can email them directly right down at the link, the email below, info@freedomventure.com. Great, awesome,
Good stuff.
good stuff.
Yeah, man, good stuff.
All right.
Now, when are you coming over? You're going to be over soon.
I was questioning your dates because I was supposed to be over in December, so I was like,
Oh.
maybe I was gonna come over for a free steak.
I'll have another event just for you, brother.
Oh,
Mary
snap.
Beth and the kids will
Yeah, it'll be great.
waiting for you.
It'll be great.
Willie.
Yeah.
All right, man.
All right, bud. Everybody have a great
All right,
week.
take
Thanks
care,
so much
guys.
for joining in. We'll see you next week.